Well, very, very excited to be here today. Having Anton Katz from the co-founder and CEO of Talos join us today. I've known Anton now for what, 5 or 6 years. It's very exciting to be able to get the chance to speak with him today and really talk about the journey of Talos and what the team has been doing over there. And very excited to learn a little bit more about what we're seeing in the space and how exciting the world of digital assets has become, especially on the institutional side of the business. Anton, welcome this morning, and thanks for joining us all the way from New York.
Thank you very much, Stephen. And it does feel like we've known each other for at least 40 years at this point. And thanks a lot for you joining from London. It's 3:30 a.m. where you are. So really appreciate the effort and great chatting with you. Thank you very much for the conference to host us here. And thank you very much, SCB, for all their ongoing support.
Awesome. Well, look, I think, like you said, we've known each other for some time, but it'd be great for the audience to get to know a little bit about, your background, what really inspired you to start Talos, and really, how does the company aim to really revolutionize institutional trading infrastructure?
Yeah, so my background is I'm an engineer by training. By training, I have a computer science degree from MIT with a focus on cryptography. But I spent my entire professional career in capital markets. So I joined a company called Broadway Technology back in the day, based in New York. Broadway became the largest trading technology provider for the sell side community in capital markets. And that's actually where I met my co-founder, Ethan Feldman, who is our CTO of Talos. I later joined a company called AQR Capital, which is one of the largest quantitative asset managers, and I was the head of trading technology there. So, through that kind of route, I've, been involved with quite a lot of different infrastructure and different technologies that provide institutions with the ability to trade all kinds of assets. We were active in pretty much every asset class out there. And in 2018, Ethan and I decided to start Talos to provide this kind of service to institutions in crypto. We simply put, like at that point, it was becoming more and more obvious that digital assets and crypto specifically is growing to be its own asset class, which was a little bit interesting because you don't really see a lot of asset classes just prop up in capital markets. But this was a brand new asset class, so very, very interesting from engineering perspective. It's fascinating because there's technology embedded in the asset class. And so, when we started thinking about like what we can do in crypto, long story short, there we said like, hey, we do know how to build trading platforms. We've done this quite a lot in the world, and so we set out to build Talos to provide institutions with the ability to trade crypto. And I'm happy to talk about the wider vision, of course, but that was actually like how we started the company. We said like let's connect to exchanges, let's connect to OTC, let's build the institutional trading tools that allow our clients, buy side customers at the time, to trade crypto. And then like you were kind of like mentioning the how do we aim to revolutionize institutional trading? It's quite an assumption, but I do think that our aspirations are there, right? What's happened in the past 3 years, so we started Talos in 2018. It's been 5.5 years at this point. What happened in the past 3.5 years is that our clients are pushing us more and more to provide this kind of like a one-stop shop infrastructure for them. So beyond just trading, which at this point we are the largest one in the world providing those kind of services, beyond just connectivity and execution UIs and APIs, we now provide things like data and portfolio management and clearing and settlement. We have a huge white labeling infrastructure effort, and that's now about half of our clients. So half of our clients are actually on the sell side. We started completely on the buy side, but today half of our clients are on the sell side. So generally, that's the stuff. And as a part of that, obviously, Stephen, you're at Fireblocks,
Right.
and we've been working together quite a lot. We have done the integration with Fireblocks that provided our clients with the ability to see all their assets, to move their assets, to
Right.
really start thinking about how their assets are connecting to trading. So quite a lot. And really what we're doing there is we're trying to continuously expand the support for the trade and investment
Right.
life cycle. That's the vision, really, to support that for our customers.
Right, you mentioned something that I thought was really interesting, right? You said there's not very often where an entire asset class really just like pops out of nowhere, right? I mean, as you think about the broader space, right, from fixed income equities, commodities, et cetera, right? You've had these
Mhm.
asset classes, they've been shaped for a period of time. They're operational
That's right.
flows. There's kind of market structure around them. But you think about digital assets, right? It kind of went from a very bespoke and niche area to kind of like pushing towards like the mainstream and more institutional adoption. Really, like what challenges as you're building this technology platform did you really face, right? And what challenges were your customers facing that you really brought into the development of the product as you see it, and kind of how's that evolving today?
Yeah. It's kind of fascinating. So to your point, right? There's plenty of asset classes out there, fixed income, equities, treasury. You can get into whatever you want, right? Crypto was kind of built from the retail sector up, and that's a little bit
Mm,
different from how other asset classes were built. Like that's just not the typical way of evolution, right? So given the retail focus of crypto initially, a lot of the infrastructure in crypto, the exchanges, the technology behind exchanges, some of the other
mm,
services were built for the retail customers. So if you're thinking
right,
about the asset class in general evolving, you kind of assume that at some point institutions will have to be involved, right? To make it a truly asset class, usually you will see institutions for a couple of reasons. One is, institutions might take a directional view of the asset or a particular instruments in the asset, or institutions on the sell side might provide services to their underlying customers. So for that reason, you kind of want
right,
institutions to be involved, and that was our bet. Our bet was that like we will see retail getting more and more involvement, but that's also going to drive institutional involvement. The challenges that happen as a result of an asset class that's evolving in retail is that some of the lessons and some of the painful lessons that we learned in capital markets when developing these systems weren't really there in the beginning. So we've seen a lot of fragmentation. We've seen different technologies that were put together, not necessarily supporting the institutional workflows. We've seen, like the all the product space and the offerings move
mm,
very, very fast. That's generally not how institutions move. The workflows are completely different, usually set in stone. Um, and so we kind of like, start. So what does that actually mean, right? If we're seeing a lot of fragmented liquidity, we're seeing a lot of fragmentation to technology, there should be a standard. There should be something that elevates it to the level of institutions.
right,
So that's the first thing we did. We kind of like we created connectivity to all the different APIs of all the different exchanges, all the different OTCs, and we provided one-stop shop, one API that institutions can write
mm-hmm,
to, or one UI that they can see and they can access all those different destinations. That's still the case today. And today we do this across custodians, we do this across
mm-hmm,
across exchanges, OTC providers, clearing, and so on and so forth, right? The other thing was the safety and the service. The service layer, the way a lot of the liquidity pools were built as well was again towards retail. That's a very different service environment than institutions. Institutions put
mm-hmm,
very large capital of money into it. They kind of expect a higher level of service. They expect there to be a phone. They need to call somebody. They need to see what's
right,
happening. From a safety perspective, when you're dealing with orders that are not like, $1,000 or $2,000, you're dealing with orders that could be in the order of magnitude of, hundreds of millions or millions of dollars, hundreds of millions of dollars, sometimes even more than that. You need to start thinking about algorithmic execution. You just start thinking about safety. So again, like quite a lot of different tool sets. So those kind of challenges are the ones that we set out to build. We build an environment that institutions see as a familiar, as a safe environment, something that they can actually
right,
work with, and
right.
working in a manner that they're used to in capital markets. That's the kind of stuff that we set out to build initially.
Right. And look, I think maybe the question I have for you is like given kind of where you started, right? I mean, let's argue from very retail driven, non-standardized uh asset class, right? With kind of I'd argue if you think about where everyone was, right? The OG firms were building that infrastructure themselves, right? Or they were
Mhm.
operating across exchanges, and you guys kind of brought in and were one of the pioneers to kind of bring in that standardization across kind of this OEMS kind of infrastructure space. Is your focus still on kind of like the broader connectivity, the broader standardization, creating more, connecting to more venues, or has it kind of shifted given kind of where the push around institutionalization of the asset class has gone?
Yeah, dude, that's a great question. You're absolutely right. The asset class has been maturing more and more. We're seeing more common infrastructure. We're seeing more common tools. So there's some things, like we continue expanding. And so, like we do see still a lot more fragmentation. So even more exchanges are
Mm,
propping up right now, but they do look a lot more institutional. The safety aspect of, like all of a sudden connecting over the internet versus connecting via co-located lines, which is stuff that we were
hmm
used to in capital markets, still doesn't apply here. So some of the challenges that existed 5 years ago still exist today. And look, I mean,
hmm
even at Broadway, we played exactly this role in capital markets. So this notion of standardizing connectivity is always there. But the tool set that's required today is definitely a lot more professional. So some of the stuff, I wouldn't say that our focus shifted, but we definitely seen an expansion in terms of the services that our clients demand. So, like now we're working very, very hard on portfolio management systems. We're becoming very meaningful there. That's been something that our clients are driving us towards, right? Clients are asking for way more reliable data than they were asking before. And in some
mm,
portions of that business, we partner. In some portions of the business, we provide our own data because we have, obviously high fidelity data. We're a trading platform. Um, we now, like we had two acquisitions today that we announced. One was portfolio engineering, and that's really, like we're just now starting to see the benefits of that. That's giving the clients the ability to actually run quant portfolio, run
mm,
indices, run passive portfolios, rebalance, backtest. Like these are the kind of things that the retail is really not engaged with. This is truly
hmm
professionals that are coming in, and we've seen a lot of that happening right now. And then, like obviously the second acquisition that we recently announced is the CloudWall acquisition, and that's a risk management system. That system is
hmm
now plugged into portfolio management. If I spoke to people 2 years ago about risk systems, you would be a little bit laughed out
Right,
of the
right.
room. It was just, like the systems were just not there. The need was not there. Today, post FTX, when there's institutions looking at their portfolios and looking at the assets move, looking at the still like a heightened volatility of the market, you need true professional risk tools, and that now plugs into our portfolio management system. So, to your question, like we continue investing in connectivity. We continue investing a lot of resources in algo execution, all that kind of stuff. You
hmm
can forever, I foresee us investing there, but we have definitely expanded the portfolio of services that we provide to our clients now because we are seeing more institutional, more sophisticated demand.
That makes a lot of sense. So I would say, like, one thing around the infrastructure space in digital assets is that there's always an influx of new competitors, right? If I think about Firebox, we spend quite a lot of time thinking around who our competitors are, what new competitors are coming into the space, what are they doing, what's the differentiation, and I'm sure given your role as a CEO and co-founder, you're doing the same. So really, what's the competitive landscape look like in the OEMS space? Where do you see kind of most of the competition, and kind of how do you see that, as you kind of look at ECNs and different things going on in the space
Yeah.
today?
Yeah, so yeah, dude, it's a good question. Like you, I think about competition. We don't let it, drive the course of the business for us because I think
Mm-hmm.
we have a pretty good idea of where things are headed to. And just like you, we have a strategy, we have a vision, we execute there. You kind of want to keep track of what's happening in the market. That's totally reasonable. I'm proud to say that we have I would say a lot more partners than competitors at this point. It's
Mm-hmm.
also the beauty of crypto and digital assets that even with our competition right now, we actually, like this is the kind of stuff that we wouldn't have in effects, honestly, we did this. Like we have a proper conversation. We can talk about the challenges that we face. We can talk about like, you're kind of like have this true mentality of a
Right,
high tide lifts all boats. I don't know if I got
right,
that
right.
exactly right, but that's the
Got
point.
it.
But at the same time, like what we're seeing is we're seeing a little bit of bifurcation versus a competition. So we're one of the only ones that look at the supporting the entire investment lifecycle. So if our clients come in and they
Right.
say like, "Hey, I want a portfolio management system," we have it. They want to say they want to
Mm-hmm.
have trading, we have it. They want to have clearing settlement, we have it. If they want to have all of those plugged in together, we can do that too. A lot of the competition that we see is generally going to be in one of those verticals. So we see some folks that
Mm-hmm.
are on the portfolio management side. We've seen some folks on the execution side. Generally, we see them on the medium to smaller deals because the largest, medium to largest players are demanding just a slightly different type of vendor at this point. So, for instance, like Talos is audited by one of the big four. Our financials are audited. We have SOC 2 Type 1, Type 2 for quite a reasonable amount of time already.
Mm-hmm.
We are buttoned up in multiple regions. We have multiple licenses as well. We generally are one of the only ones that have exactly this kind of this kind of
Mm-hmm.
view, and this kind of the resources that we invest in it align us with the largest organization. So there's not a lot of competition for us for the larger contracts, but for the smaller ones, we see competition periodically. We generally win on things like the algo, the service
Mm-hmm.
layer, our ability to scale, our ability to support our clients correctly. That's the kind of stuff that really differentiate us from the rest.
That makes perfect sense. I'm going to shift gears a little bit and kind of let's say focus a bit more on the institutional adoption aspect of things, right? Because again, as an infrastructure provider, you're out in the market and talking to folks that are now engaging in the space, maybe in a way that they weren't before, and kind of seeing the shift of this space over the last few years. I mean, we can't kind of have any session without talking about the approval of Bitcoin ETFs, both here, in places like Hong
Mhm.
Kong, but also in places like the U.S. Really, it was seen as kind of a very significant milestone for the broader industry, kind of giving that kind of stamp of approval around the asset class and this idea that it could attract more potential investors. How do you guys plan on really supporting your clients, really in kind of
Mhm.
navigating the opportunities that might arise from the kind of the broader approval of the ETFs, and how are you seeing maybe potential changes in trading behavior or the way that folks are engaging
Yeah.
in the asset class, given now this kind of new derivatives tooling?
Yeah, look, I mean, it's Stephen, just like you guys, I'm sure that you've seen record volumes on your side and record inflows as well. It's been like this for us as well. So the Bitcoin ETF in the United States was approved in the like in the middle of January, I think January 14th or something like that. It's
Mm-hmm.
funny to talk about it today because like literally in the past, like 12 hours, we've seen this kind of like traction on the Ethereum ETF potentially,
Mm-hmm.
like getting some reversal and potentially even getting approved,
Mm-hmm.
definitely getting closer to approval in the United States. There's a path now. So it's interesting to think about those kind of things because they truly are milestones. They signal to the wider community that like the regulatory landscape is getting up to speed on this. That this is not going to be blocked. This is going to be supported by larger organizations.
Mm-hmm.
It also opens up the door to a lot of new investors that could be coming into this. We very much obviously support any kind of action. We have seen newer and new and more traditional clients coming in
Mm-hmm.
as a result of this because like the minute you have an ETF, what happens in the institutional world is the institutions basically saying like, okay, I can start actually thinking about diversification of my portfolio. There's a liquid
Mm-hmm.
asset here that people can use for this. But generally speaking, so I come from asset management community, you don't think about diversification of your portfolio with a single instrument. You say like, okay,
Right.
well, there's this asset class that is, like crypto and broader digital assets, but crypto. Now they're starting to think, okay, I can get some parameters here, but the exposure to a single instrument is still a little bit limiting. So a lot of them are starting to think about exposure to wider array of instruments. Now we're starting to talk about like actual portfolio construction. That's exactly the D3X platform that we purchased a year ago. And so that's
Mm.
some of the services we're rolling out right now to customers, starting to think about like how to actually architect like how to actually construct a balanced portfolio of crypto assets that will allow them to achieve whatever goals they have from an investment perspective. So there's quite a lot of
Mm.
that. And then, like another aspect of it is there are big firms that are coming into this, the kind of names that everybody knows, and we didn't think we're going to see for a while coming into digital assets, coming into crypto. And again, like for us, it's that's our bread and butter. We know how to support this. We know how to do this. We know how to support those kind of clients. How to put the infrastructure, how to potentially integrate with their infrastructure. We do quite a lot of custom work for those kind of customers. And it brings a bunch of retail investors across the world to the table as well because it's just a better known asset now. So as a result of that, the white label aspect of our platform. So we have again, like half of our business is actually creating white label technology that is used by banks, by institutional
Yep.
brokers, by retail brokers to their clients. That kind of infrastructure is now getting a run for its money. because it's in high demand. We're seeing a lot more people coming into this and trying to provide trading capabilities and services to offer those kind of services to their respective customers.
That makes a lot of sense. We wouldn't talk about, again, institutionalization, right? ETFs are on one side, tokenized securities, I think, are on the other side, right? This idea that, all these real world assets or all these financial products are actually going to move onto the blockchain, right? And make it a more efficient basis for folks to be able to, one, interact with those assets, but two, operate within that asset class, in a much more scalable way. When you think about kind of tokenized assets as a whole, things like tokenized securities, which I think are still in the early stages, and I'm sure that you guys are kind of defining and building out the broader strategy for that. What unique capabilities are you thinking about, or have you already developed to really enable customers to interact with the tokenized assets, either on the issuance side of the house, trading, lifecycle management side of the house, as you start to think about things like tokenized money market funds and all these different things that I believe we'll start to see pretty much a full enforce towards the end of this year and into next year?
Yeah, I mean, like just like you, it's we're looking at tokenization as something that's very interesting, and ultimately, it's we call it the phase three of our firm. We would like
Mm-hmm.
Talos to not be the investment infrastructure for crypto, but to be the investment infrastructure for digital assets, which basically means all assets. We do strongly believe that we will see migration of existing asset classes to digital assets rails, and tokenization is a part of that.
Mm,
Um, we've done a bunch of work there to make sure that our clients can continue trading. And already today, Talos actually supports FX and our portfolio construction supports equities as well. So from a support of different asset classes, it's not different from any systems that we built before. We always built Talos knowing that there will be multiple asset classes there. But there's also, like something to be said for scale. We still haven't seen. We're starting to see some things with a lot more scale on the tokenization side. Generally speaking, I think that Talos is going to be the very first thing that we're going to be doing there is we're going to be connecting the multiple primary issuers pools to make sure that our clients, our natural taker clients, the largest ones especially, can take advantage of that and can actually trade those assets across those multiple pools. So the integration game, the ability to create this like secondary trading market, that's the kind of stuff that we really wanna focus on. Working with a couple of players in the industry right now, the key thing is to find the right type of assets and to prioritize those because, as you know, it's very open and everybody's doing experimentation across the entire gamut of those kind of assets. But yeah, a lot of interesting stuff coming up there.
that makes a lot of sense. I mean, I think it's still early, right? So I mean, I think that's the base infrastructure and setting and establishing that I think is fundamental and really supporting the scale that I think we'll start to see over a period of time. I think
I think it's
maybe
exactly
want to
right.
shift gears a little bit towards DeFi, right? And the institutionalization of DeFi, right? We talked about crypto, as an asset class started on the retail side of things. We've then had centralized venues and exchanges. We've started to shift towards more institutionalization around the asset class. We still have this world of like broader DeFi and institutionalized DeFi. And kind of when you think about that additional infrastructure that's needed, right? And kind of like you said, right, rising tide lifts all boats. So the need for kind of the broader collaboration between market infrastructure and this new technology tooling that we see in DeFi. Really, how do you position Talos to enable both customers to operate within these maybe potentially centralized venues within these structured derivative type products? And then as you think about
Yeah.
DeFi, how do you position Talos to be able to support clients in that space as well?
Yeah, absolutely. So we announced the launch of DeFi support a few months ago. I've seen very strong demand since there. But you're exactly right. It's like how do you think about DeFi? How do you support DeFi? Well, DeFi is yet another portion of liquidity. Our clients need to access liquidity. Now,
Right.
it means, like DeFi is a little bit different. The liquidity generally is lower than the liquidity that we see in centralized facilities, unless you're talking about tail assets. And there's definitely tail assets that on DeFi are, just have deeper liquidity and allows our customers to potentially go for a very specific class of customers to go and trade something that is not yet even available in centralized facilities. So look, our job is very simple. We need to make sure that our clients are able to access that. So that's kind of like the stuff that we've launched. Then the added thing there is I mentioned, like institutions have certain expectations. Some of those expectations are around compliance and safety. And DeFi
Mm-hmm.
has those kind of challenges, like from a compliance perspective, there's a lot of work going in right now, both on the protocol level and on any service provider to actually make sure that we can trade DeFi in a compliant way. That's been a huge, huge, huge stream. And then safety, man, I mean, it's between hacks that happen on a protocol level, between errors that happen and people sending money to bad wallets, there's security
Mm-hmm.
incidents. Our job is to again like to protect our clients, to provide this kind of layer that allows them to interact with it, the same way they're used to interacting with institutional capital. So
Mm.
quite a lot of interesting things going on there. We're also going to be making a couple of announcements around DeFi in the next couple of weeks. But yeah, DeFi is a portion of our strategy. It's a big portion of our strategy going forward.
Given it's a portion of the strategy, right, and given the broader implications and let's say the growth around the technology, one would be remiss not to talk about the regulatory part of things, right? And obviously the recent action by the SEC against Uniswap, right? I mean, there's more of a heightened regulatory scrutiny on DeFi protocols, and you mentioned really that compliance layer and all those things that are being built out. Can you really share
Yeah.
some of your maybe or at least your perspective on some of the key challenges in from a regulatory perspective that DeFi might be facing at the moment, and how are you thinking about that as you think about the strategy around supporting this space within Talos?
Yeah, look, I mean, I think the DeFi is under the same umbrella as the rest of the crypto community and the crypto assets. I think it's all in the same boat, and we're all hoping for a lot more clarity from the regulators about like what we can do, what we cannot do, and the things that we need to register for if we need to do certain things, if we are able to
Mm-hmm.
do certain things and interact with certain assets. I think it's the same thing, like DeFi needs to kind of like prove that it's not a rogue agent. It's working with the regulators. It's working with the institutions. It's working in the best interest of those institutions and the retail communities there to protect and putting enough machinery to protect it. And I do think that that's actually happening. I think that there's no,
Mm-hmm.
like there's not a lot of protocols out there that will say like, no, 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 we're going to go completely against the regulation, against the retail. Like like that's just not the point. Like it's built to actually provide value. So I think those are, like it's the same challenges as the rest of the crypto community. Today, funny enough, like we've seen tons of traction in DC, right? The SAB 121 challenge was passed on the Senate with a
Mm-hmm.
huge amount of votes, and then now FIT 21 is at the table and actually getting quite a lot of traction too. So actually, I think we're seeing the tide turn for the first time in a while in the United States
Mm-hmm.
specifically. We're seeing, the regulators are moving towards, hey, let's work with crypto, and I think that DeFi and hopefully Uniswap and others are going to be covered by exactly the same wave.
That's awesome perspective. And Anton, I know we're at the top of time, and again, really appreciate your perspective. I think hearing about the journey of Talos, hearing about what you guys are doing to support institutional clients as they come into the space, I think it's critical from a market infrastructure perspective that we have companies like yourself in the space. So I appreciate your time and thanks for your perspective here today.
It's great to chat with you as always, Stephen. Thank you very much for your time. Thanks a lot for all the questions, and thanks a lot to SCB 10X as our hosts.
Thanks, everyone.